You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central, 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you have been binging all week. If you like what you hear, not just for this program, but for everything we put out throughout the week, make sure you keep those reviews coming on your platform of choice. Could be Apple, could be Google, could be YouTube, Spotify, wherever you get our program, even via the App Store. I know a lot of you get our stuff via our app on those stores. Wherever you get it, make sure you leave those reviews so folks can continue to discover our content in these trying times. We've all seen the slew of new additions to the options and indeed volatility space over the course of 2020. They need a place to turn to, so we're happy to provide that. Keep those reviews coming. Keep those questions coming, too. We do love to hear from you guys. I want to thank all of you again who joined us earlier this week for our epic 4-hour extravaganza known as our election night special. I'm amazed I still have a voice after all the talking I've had to do this week. But it was great. You guys joined us from literally all over the world. It was fantastic to see so many of you. And there were so many different viewpoints and ideas about what's going on out there in the marketplace. So many great guests, too. I can't even thank them all. So many joined us. If you missed it or maybe you missed any part of it, don't worry. It is hitting the network as we speak. We're carving it up into smaller, more bite-sized chunks, about 30-minute chunks. You don't have to sit down and binge all 4 hours right away if you don't want to. You can take it piece by piece. In fact, I do believe the piece that just hit the network is the piece with my cohort here who's joining me on the old Volatility Views program today. None other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, A, welcome back to the program. And B, have you recovered from the epic election night spectacular, sir?
I asked for the early slot. I appreciate Gene for giving me the early slot because, you know, since I'm old, old people crumble at like 9 o'clock at night and are ready to go to bed. So I did recover, though. What was funny is I went to bed and it looked like Trump had won. the betting line was 80%.
Yeah, they were firmly.
I woke up in the morning and it was 20%. Like, how did that happen?
You sent us that link, and something had surged. The futures were limit up. Trump was at 80+% on most of the betting outlets. You're right, and then kind of just a big reversal. So a lot to unpack there. By the way, you say you had to go to bed early, but I saw you lurking throughout our chat throughout most of the night. So you were keeping up with the show, even if you maybe from bed. I don't know, but
yeah, I kind of was. I was kind of staring at the ceiling, trying to read a book, looking.
Kind of hard to go to bed early on election night. And I'm also pleased to say we are joined today in the newly minted Matrix Executions hot seat. The chair is so new, we're just taking the wrapping off right before the show. They just delivered it. We just rolled it out. And the first person who gets to break in that chair, our inaugural guest in the Matrix Executions hot seat, Mr. Paul Anderson, the director over there at Cerulean Trading. Paul, welcome to the Volatility Views program.
Thanks, guys. I'm really glad to be here. I was just to comment on your betting. I'm in London, England, actually, is where the company is headquartered, and the bookies were paying out on Trump, and then they had to do a quick reversal in the morning, and they all got stuck out on the election.
That's a pro tip. If you have a winning ticket, cash it right away. Right? Don't wait.
Yeah, absolutely. Cash out.
Because then make them come for you. I love that. They were already paying out over there. That's hilarious. Oh, well, Paul, since this is your first time on the network, we like to do with all of our first timers here. Give our audience a bit of an overview of your background in the options and indeed volatility space, as well as what it is you guys trade over there at Cerulean Trading.
I'm a bit of an old dog myself. I started in the late 90s, traded for illustrious institutions like Citibank and JP Morgan on the big trading floors, have run a market-making group and worked for hedge funds as well. So I've done buy-side, sell-side, bank-side. And Cerulean is a brand new, almost experimental fund, and we are we're trying a few small strategies to begin with in terms of technical analysis with huge leverage on options plays. We're doing vol arb. We're looking at earnings trades. We're looking at swing trades, and we're actually dabbling in some Bitcoin.
Oh, so a little bit of all of the above over there at Cerulean.
It's one of those nice things that as soon as you kind of get the shackles off from the man, you can kind of do some more interesting things that you've never been able to do, and that's sort of the experiment that we're doing here.
I like it.
And we're a small place, and we're just restructuring everything. So finding institutions and finding guys like you guys who are giving us some great content that we don't get anymore because we're not in big funds or banks or anything. Finding places like you guys is a great thing for us. We love it. Both you guys, the options pit and the radio here they're both awesome.
Well, we'll take the love. I don't know about the rock lobster love. We'll see about that as we keep on rolling. Right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is on the volatility trading and trending and unusual activity and all sorts of fun developments across the broad spectrum of volatility. We're going to talk the vol products, maybe some of the indices, maybe some of the ETPs, single name stuff popping off with the earnings vol, all sorts of fun stuff. So stay tuned. And maybe I got a little bit ahead of myself on the show last week, because I do believe on last week's show I said, by the time we gather here together next week, we'll probably know who the president of the United States is. And coming into showtime, at least, that is not the case. Certainly seems like we are trending in a certain direction. It does seem like Biden is getting closer to securing the elusive 270 electoral votes he needs to become the next president of the United States. States that were firmly in the red camp back on the night of our special have now swung the other way. They have continued to count votes. By the way, I filed my vote here in Chicago the day before the election. They have a great drop-off. I did it all downtown, right in front of the Board of Elections there. And I just got the notification, like today, that, we're finally counting it. What have you guys been doing for the past 4 days? So it does take a while to get to some of these votes out here. And the market's kind of been reflecting that. It's, as Andrew alluded to, it was an interesting narrative unfolding on election night, because it definitely seemed to kind of be falling into that old saw of, okay, Republican/incumbent, good for him. Well, the market's going to rally then. Trending towards the challenger/Democrat, market's going to sell off. We saw that playing out when, as Andrew alluded to, when the market took that firm swing towards Trump. Futures limit up, Trump 80+% on all the betting sites out there. It seemed like we had momentum in the space, and it seemed like the market was favoring a return of the Trump administration. Then fast forward, not even a day, the next session, the markets were firmly in rally-ho mode and pretty much have been for the rest of the week, even though we don't really have an outcome yet. And if we do have an outcome, it is trending in the direction that was perhaps causing the sell-off on Tuesday night. So a lot of strangeness unfolding out there in the market. Speaking of strangeness, it seemed like we had a little bit of red on the screen to end the week here. And then lo and behold, wait 5 minutes. That is no longer the case. Most of the major indices have swung now to the green ever so slightly. The Dow's up the Nasdaq's up about 0.15%. The S&P is a little bit north of unched, and the Dow's still in the red, ever so slightly off 0.15%. But still, can't even maintain any red at the end of the week here. The market is just sailing past this election, apparently sailing past all things Corona as well, and continuing firmly in the green. Coming into showtime, we saw our old friend Spikes over there at about 26.25 coming into the start of the show. That put it down almost 13 handles, about 12.75 points from this time last week. So obviously a lot of that election juice coming off the board, listeners. VIX Cash, similar story, was at about 25.75 coming into showtime. That put it down pretty much the exact same amount, about 12.75 points. And our old friend VVIX, aka the volatility of volatility, pretty much squeezing away as well. Was at about 113.5 coming into the start of the show. That puts it down 36.5 points. So we were playing around 150 back on the show last week. Now most of that juice has come off the table. So a lot to unpack. As our guest, Paul, I will start with you, sir. What has been lighting up your tape over there at Cerulean this week, sir?
I mean, what else can there be, right? It's just been the vol crush of crushes, and you're in it, and you saw the term structures just get smashed. You saw the vol getting smashed. Watching it throughout the day on Tuesday was just, it's one of those great trading days to participate in for sure, but just to watch, and you learn a whole lot about it because it's it's the earnings trades for the entire stock. Every stock's there and every stock's doing the same thing. It's just it was an amazing thing, and watching the retreat on the volatility was just tremendous. So it was sort of get a little bit short and just watch it, keep going, and that's what we did.
Well, I'm glad to hear you on the right side of that. It seems like a lot of people were on the right side of that. I was asking a lot of people. I was asking them on the election night special. I'll ask you now, Paul, the same question. It did seem like they came for this vol pretty early. Like you mentioned, the vol crush of crushes this week, but they actually started taking it out a couple of weeks ago. And, if past is prologue, we look at other major events. They did something similar around Brexit. We all know how that unfolded. They did something similar at the 2016 election, and it ended up being all right if you were patient enough. But in that initial blush, I know some people got bit by the vol resurging back as well. Were you surprised, as I was, that they came for this vol as quickly as they did even before the election? I mean, after the election, I kind of get it, but before the election, they've been crushing it for about a week and change leading into it. Did that surprise you at all? Is that what you expected?
It did, actually, and you guys alluded to it last week with the put call ratio that we had. The guys that were buying puts like crazy, so everybody was definitely going for it. And the big question last week was, you guys said it as well, and it was, do we get on back of this thing, or are we, is it too crowded already, and suddenly something bad happens and it's going to get ugly? And I think one of the strange things we have is because I'm in another country and the news flow is different than. I talk to people in America, and you're talking to people in Chicago, and they're saying, we're going to leave town because there might be violence and there might be this, and it's, it was a pretty calm election in the end, so you can see where it came out afterwards. But before it came out, I was really sort of hands off, right? I didn't want to pile into it, and it was sort of a wait till you sort of see the spikes, or wait till you sort of see the move, and then get on the back of it and just take it. So maybe you don't take the whole trade, but you're taking that safe part out of the trade, and that's sort of what we did.
And you mentioned you were getting short some vol this week. What is your go-to? What is your preferred vehicle to get short vol? You out there trading maybe the VIX options and the futures? You going the more direct route of SPX? How do you guys get short or indeed trade vol over there at Cerulean?
So we're doing the SPX. We're doing straddles and strangles and things like this, and we like to marry up different positions because we do a lot of directional thought as well. We take a double view if you take it. I mean, options to me, you need the direction, the magnitudes of the moves and the timing to get it all right. And we're trying to be very good at two of those things. How much magnitude, how much vol is going to change, and then the amount that it's going to move. When we're playing the vol, so sort of the vol and the direction as a combination. That's sort of our strength, and that's what we were doing. So it's normally just the SPX.
So having to go out there and do some, shall we say, aggressive gamma scalping around that SPX that doesn't off-put you from trading the more direct vol route there, Paul?
No, I don't know. Maybe it's just because I'm an old man and that's what we're used to, right? That's what you traded for so long, and you sort of get comfortable in the products you're comfortable with, and you can do a lot of, in sort of the VIX and a lot of those things, maybe we use those things for hedges instead of direct trading, and maybe we shouldn't. But because we're sort of we sort of always have a directional overlay, into the volatility. It's something that we're doing in terms of we're trying to make some money on the spot as well as on the volatilities.
It's funny you mentioned that, because I was thinking the same thing even as I asked you that. For guys who came up on the trading floor, it's just kind of what we're used to. Having to scalp the gamma is just kind of the cost of doing business out there. So yeah, I guess if you come from a certain perspective on trading, that's just kind of the inherent cost. Kind of like the rock lobster who's been hedging since the dinosaurs were roaming on the floor of the SEBO, sir. What was lighting up your tape on this, shall we say, interesting volatility week, sir?
Did you invoke me when you invoked when dinosaurs were roaming around the floors of the SEBO?
Perhaps. That may have been me. I make no claims one way or the other.
I just want the new guy to know that his honeymoon will be short here at the Option Insider Radio Network. Although I have been here for 10 years, so apparently he could just call me a dinosaur and I'm okay with that. But which actually I kind of am. So what happened? Clearly, vol's not as high as it was last, even Tuesday, right? We were in the mid-30s for VIX, and now we're in the mid-20s. I don't think that's hugely unexpected. Vol of all has taken the biggest hit. We went to probably near I'm going to say a 6-month high, maybe briefly when we had that sort of the September vol apocalypse with SoftBank. And we haven't seen vol that high again probably since June, when the whole COVID thing, when everybody re-locked down for COVID. There's two things that are interesting now. One is the VIX term structure has got, I'll tell you what 2020 is going to be the year for, Mr. Longo? Is going to be the year for whacked out term structure. It
kind of has been all year, right? So why not finish it up that way?
Why stop now? We got one last shot. The thing now, Georgia, with the counting of, with all the votes or whatever, where they're finding all the votes, it looks like it's pushed the Senate race in Georgia. Both of those seats will be contested. So those will be potentially, I don't know if the votes will be split or not split or whatever, but, a substantial, there's some risk that the Senate could go. I think this, even if they win those seats, I'm not sure exactly, but the term structure has shifted. Now the Jan future and the December future are trading at a pretty good premium to everything else. So that to me, I'm not the sharpest tool in the shed, but I'm like, wow, they're really keeping the decent Jan high. So there is still some election uncertainty. how far does Trump go in challenging results? How far does, how big is the Georgia Senate thing? Do we go, it potentially could set up as a majority in the House, even though it's small, a majority in the Senate because Kamala Harris, she could be the deciding vote, right? So everything literally could be done by one or two votes in a majority where the Democrats have all sides. Historically, that hasn't been great for the U.S. Either Republicans having the majority or the Democrats having the majority has not usually worked very well because it's kind of been like a spending binge, although hard to say that's not what we've had already as well. But at least from a vol point of view, the D's to the Jan, so there's a bid in SPX for this cycle. Without question, the only thing I can think of is the runoff in Georgia. It's the first week of the first week of January. So, I think that would be a very steady vol number. I think you could create some interesting calendars around that, unless there is a surprise when they do the recount in Georgia, which I'm sure they're going to at this point. That might change things a little. So there's plenty of uncertainty out there. As far as VIX is now, if you think about it, what happens to the December cycle in VIX? If we're looking, farther in history, now all of a sudden, because you're taking the forward volatility of whatever the term is. So, as they push those futures out, that vol is not necessarily going down in the back in SPX, although you could see a lot of vol just tank in the front. And I think actually there could be some interesting opportunities because you've got the really lower short-term vol, which you could buy with straddles and stuff, because I think the market could still move pretty easily. 2 or 3% either way is not a stretch in any particular week, right? Even over a 2-day period. So I think the market is pricing weirdness for the potential of a runoff and a recount. But in the short term, it's pretty much taken volatility back to what I would call the COVID lows, which would still be extremely high under 90% of the circumstances over the last 20 years for vol. But right now it's just kind of average, like 2% per day move in SPX or 1.5% just feels very average this year. But historically it's not. That's actually very high. So I don't think that's going away. We'll see if we can, if we can break through to get to a lower vol level, only because the market is waiting, right? Because remember Bush v. Gore, we had to wait until the first week of December. When the market has to wait, it doesn't generally go anywhere. So short term, you have this funk in vol where short term, not much will be happening, but there could be a substantial bid for vol because yet again, we have another election, a runoff, a recount or something where there's some substantial uncertainty about that. So I think that's where I see vol as it is right now. But it wouldn't surprise me to see like a 23 or a 22 VIX. I didn't think we could get to 25 VIX till next week. But I think we're seeing it today. I'm just looking right now and we are there. We are in the 25 handle. So got there a little faster than I thought. But I'm not going to complain about it. And I don't think this weirdness is going to go away unless we have, again, some sort of substantial change. Somehow Donald pulls a rabbit out of a hat, blah, 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 whatever it is. But I think this funk in the curve is going to stay there for a while.
The good old funk in the curve. We could point to many different parts of the term structure throughout the year of 2020 and say there's some funk there. A lot of it was centered around the election for most of the year. But now that that's in the rearview mirror, I'll ask you a corollary, a related question, Mr. Rock Lobster, to what I asked Paul earlier. I mean, I understand why they're coming for the vol now, because obviously, and why they came for it last week, I understand a little bit less, but why they're coming for it this week, it makes sense. The event is over, it's behind us, and so far, at least, the country is not in flames, so that's a good thing. But are you surprised, Mr. Rock Lobster, just from a sheer underlying perspective, that they came for these stocks as aggressively as they did? I mean, if you go back to election night, they were fading Biden and they were loving Trump. And now every day since, we have moved inexorably closer to having Biden take the hot seat, and yet the markets couldn't care less. I don't think they've, by some measures, that was the best post-election day we've seen in over a century in some of these indices. They can't stop rallying. Even today, they're going to start rallying by the end of our show even. So are you surprised that they're coming just for straight-up stocks as aggressively as they are right now, sir?
Well, I think part of the reason I'm a little surprised about it entirely because there's so much, there's always the cash on the sidelines, so much cash on the sidelines. And I think there was quite a bit on, like Toussaint was saying, he had clients who are like, and I know people, that have pretty substantial dough, and they're like, they were just sitting it out. And they're still going to probably sit it out, to be honest, until they kind of see where the cookie crumbles. A lot of investors that are kind of savvy, they're not FOMO investors. They're opportunity investors. So they'll wait around. So what? They miss some short-term gains, and then it's not like the market goes straight up every year for 10 years. So they want to sit around and see what happens. And I think right now that's not a terrible idea. But it's end of the quarter, end of the year. There's a lot of, let's say, mutual funds and stuff that might have been holding back, and they're piling in because they need to. That's their job. So it doesn't surprise me hugely that it happened, just because there was a lot of there was uncertainty before the election what was going to happen, and now it's at worst it still will be pretty close Congress, so it'll be hard to do anything massively radical. But that is still, I believe, a fear, and it is still priced in. So,
Paul, you mentioned at the top of the show that in addition to trading vol, you're also trading some direction over there at Cerulean. We certainly got a lot of direction this week. It was all in one direction. So if you're looking for something else, maybe not what you wanted. I'm curious, same question for you. Were you surprised that not only did they crush the vol, but that they came for the upside as aggressively as they did and are continuing to do right now, Paul?
I'm not terribly surprised. I mean, it's exactly, what Andrew said, it's uncertainty, right? It's over. We're still here. We're still going. I still have, you still have your capital and the stuff that's on the side. Suddenly you're thinking like, I'm missing it. And for sure, any manager who is saying I'm going to sit out this because of whatever definitely has to put his money to work. Where else are you going to do it? What else can you put it into? There's just not that much that you're going to be able to do in the next 6 weeks, to get it in there by the year end. So I think that it's there, and I think you'll see it continue for the next, couple of weeks where you're still going to go. I mean, COVID is still here, but there's not there's that is almost certainty in the certainty that it's still there and it's not gotten worse. And, we're another week towards, hopefully it ending and all the rest of those things. So I think it's, we're past that big hurdle that everybody's been, the big pill has been swallowed. And, there wasn't rioting, there wasn't looting, there wasn't all those things that people would have really had a bad reaction to.
Yeah, if you looked at the VIX futures a few months ago, you would have thought this country would have been in flames and through January, the way they were pricing things in out there. Now a little bit calmer, a little bit saner heads prevailing, looking at the VIX futures right now. Coming into showtime, we had the cash, like we said, a little bit north of that 26 level or so. Well, it's a little bit shy of it, actually. And we saw the no future pretty much in line with it, about a third of a point, quarter of a point premium to the cash. So not a heck of a lot going on there. DEES, remember they had priced some nice juice into DEES and January. So obviously pricing in some tumult through the election. DEES right now is at about 1 3/4 point premium to the cash, and Jan is pretty much the exact same level. So they're not pricing in any extra juice going out to Jan, which again could be a good sign that perhaps we're not looking at some sort of contested outcome going all the way through election day. At least that's what the market is doing. But again, the market was crushing the vol well before the election even happened. So maybe take some of the vol market's prognostication with a bit of a grain of salt. Let's go out to the options front now in volatility land. Let's start with Spikes options. Like we said, the futures still halted in Spikes land, but as Tom Gallagher told me on the network not too long ago, he thinks they're in the fourth quarter for approval, getting those futures back. So hopefully before the end of the year, you will be able to trade Spikes futures yet again in your hot little hands. That'll make these options even more interesting to parse. But some folks are still, like we said last show and last couple of shows actually, some folks are still fighting their way out there onto the Spikes options because you got some decent sized trade. Looks like mostly retail size starting to pepper in there. Let's break down the top 5 here really quickly. Number 5, it is the Nove 50 puts. Again, I talked about this with Tom from MyAx last week on the show. There are some funky strikes going up here, maybe some carry plays or just some interesting deep options afoot here. Number 4, we've got the Nove 23s. Number 3, back to those funky strikes, the Dees 75 puts. Number 2, the Nove 47 half puts. So all fairly deep puts there. And number 1, the February 11 calls. Remember I said come into Showtime Spikes is at about 26 and a quarter. So pretty much all of those outside of the 23 calls are fairly meaty options. If Mr. Meatball was here, you might call them meefy. All right, coming into VIX options land, a decent day on the tape. Nothing explosive, but again, we've had multiple days of rally post-election, so maybe taking a bit of a breather here to round out the week. Coming into, just as of a few minutes ago, about 430,000 contracts on the tape in VIX land. That's, again, a decent day. If you remember back not too long ago, the ADV was about 310. So that's a pretty decent day out there. We have seen some days this week a wee bit higher than that. The ADV has ticked up again. It's up to about 544,000 contracts. Puts it up about 65,000 contracts from our last show. So election week, good for some wallpaper out here. Let's break down the top 10 positions out there in VIX land. We talked about it last week, and it has not changed this week. There is still but one call to be found in the entire top 10 of the VIX option spectrum out there. Like I said, we saw it last week. Before that, I'm hard-pressed to think of another time when we've really seen that out there. VIX, traditionally a very call-heavy instrument. Not so much these days, all fading all the time. Cost you 140,000 contracts to break into the top 10 in VIX land. That gets you to the Dees 25 put. Number 9. $1.42 of the Dees 21 puts. Number 8, 151,000 for the first and only call in our top 10 this week, the Nove 65 calls. Number 7, $1.52 of the Nove 22 put. Number 6, 156,000 of the Nove 21 put. Starting to see a bit of a theme here. Listeners, number 5 here, 163,000 of the first and only March on our list, the March 17 puts. So going out a little bit there. Number 4, 169,000 of the Nove 25 puts. Number 3, 169,000 of the Dees 22 puts. Numero dos here, 222,000 of the Dees 20 put. And number 1 with a bullet here this week, 233,000 of the the Feb. Easy for me to say. The Dees 23 puts. I've been talking a lot this week, listeners. Good thing the week is coming to an end here. Let's break down really quickly what was lighting it up out here this week from an overall day-by-day perspective. Today, like we said, kind of a light day out there in VIX options, 431,000 contracts on the tape. The most active contract today are the Dees 20 puts with a whopping 67,000 contracts out there. Those are also our number 2 overall in terms of size OI, so they're getting some paper today. Followed by the Jan 22 puts, 37,000 on the tape, 35,000 of the Jan 25 puts, 27,000 of the Dees 22 puts, and round out our top 5 here, almost 21,000 of the Nove 26 puts. Going out to yesterday, also a comparatively quiet day, 435,000 contracts on the tape. The most active contract were the Nove 42 halves with about almost 22,000 contracts, followed by the Nove 70, yes, listeners, 17,000 of those, 16,000 of the Dees 110s. So all sorts of funky strikes on the tape out there yesterday. 14,500 of the Nove 28 calls. So a lot of calls yesterday, actually, as well, which is kind of interesting. And then 14,000 of the Dees 20 puts for the top 5 yesterday. Wednesday was the big day, obviously, kind of the post-election blush there. 1.07 million contracts on the tape. It's been a while since we've seen VIX eclipse the 1M mark out there, but it did it on Wednesday. The most active contract on the day, the Nove 24 puts, 111,000 on the tape. So that's kind of the VIX of old starting to make its presence known again, the day when it could do more in one option than most other entire contracts and names do in an entire day. So getting some shades of that back in VIX land. Number 2, 98,000 of the Dees 22 puts. Number 3, 67,000 of the Nove 26 puts. Number 4, 51,000 of the Dees 25 puts. And round out the top 5 on Wednesday, 31, almost 32,000 of the NOV 75s. Back to that 75 strike out there. Tuesday, also a very active day. 814,000 contracts on the tape. 53,000 of the D's 23 puts, followed by almost 53,000 of the D's 21 puts. So a bit of a vertical and or a roll going up there. 44,000 for number 3 of the Jan 20 puts. 33,000 of the D's 20 puts, and round out the top 5 on Tuesday. We've got, looks like, about 32,000 of the NOV 35 calls. Monday, a fairly active day. Everyone kind of waiting and seeing with, obviously, the big day one day away. But still 579,000 contracts on the tape, so a decent day out there. 48,000 contracts of the D's 20 puts was good for number 1. Number 2, 36,000 of the NOV 22 puts. Number 3, 33,000 of the NOV 26 puts. Number 4, 24,000 of the D's 24 puts, and round out the top 5 on Monday, 23, almost 24,000 of the D's 80 calls. So another funky call strike out there. Mr. Rock Lobster, I know you and your crazies all week are watching some VIX action out there. Anything interesting lighting up your tape this week, sir?
Anything interesting? Oh my gosh, the huge put buyers. That's been the biggest story. Nobody and their brother wanted to buy any calls this week. I was looking at the D's. There's a huge buyer of the D's 20 puts in VIX, and just to give you an idea of how volatility collapsed. Okay, the D's 20 puts were trading in December. They were trading a quarter when VIX was 37. And now they're 40-45 with VIX 25. So just to give you like a little sense of, VIX is down about, I don't know, let's call it $10. And those puts are up, I would say 15-20 cents. They're probably a better buy now at 40 with VIX 25 than they were a buy when VIX was 37. And they were trading 25 cents. So the volatility, I think, is down on those puts probably 40 points in 3 days. So I think there's a lot of interesting December setting up, super interesting, to be honest. So, but overall, the story has been probably since Tuesday, put everywhere.
Pretty much the tail of the tape out there. Probably a little bit different tail out there in SPX land. Paul, you said you mostly play with your vol using the more direct route of SPX. Obviously, we saw a ton of SPX paper hitting the tape this week, so I don't expect you to regale us with all of it. But were there any interesting trades or trends or activity that kind of came across your radar this week in SPX, made you kind of stroke your chin and say, that is surprising to me, Paul?
Honestly, I keep watching these VIX numbers and these VIX puts go through, and it's just tremendous, And I don't know if they're still rolling these things down or if they're just, initiating again. But just the volumes and the direction is just it's phenomenal. On the SPX, it's this, it was a similar thing with the term structures and how we're looking at, the melting of them and where the end of the year is coming through and where the January is coming through, and how we're trying to take advantage of the little moves that are happening in there. But it was honestly, it was just such a I guess it was one of those weeks when normally I would have said that our money or our profits are more directional than volatility, and volatility is sort of an alpha or a kicker to the other side. But this week it's certainly the opposite. You had to be right on this, and you had to be, in the shorts when you needed them, and that was just the story of the week. It was one of those, one of those great weeks, one of those incredible weeks that you're not going to see it all the time. That's for sure.
Well, if you're watching VIX all week, maybe you have to start adding a little bit of VIX to the rotation over there at CERULEAN.
Yeah, honestly, the more I wish, I kind of feel like I missed. I have a little bit of FOMO on the last couple of weeks with these VIX puts, to be honest with you.
FOMO, yeah. Well, it's kind of hard to argue. Everyone and their mother seemed like they were putting on some VIX puts. Let's get out really quickly into another product you guys like to fade, and that certainly was the trade du jour out here this week. It was good old VXX. We kind of talked on the show last week how it seemed like the VXX response to the sell-off we saw out in the markets was kind of muted. It seemed like the fade was in even as they were kind of rallying. They were saying, we'll take it up a little bit, but this far and no farther. And the second we have an opportunity to crush this thing, we're going to do it. And that's pretty much exactly what happened. Coming into the start of this segment here, VXX was actually shy of 21, 20 3/4, down almost 6 handles, 5 3/4 points from where it was this time last week. So they pretty much, I think the technical term is they annihilated this thing this week. The ADV ticking up pretty strong. It's up to about 220,000 contracts. That puts it up about 15,000 from last week. So VXX has been ticking on usually week after week, getting a little bit more momentum every week. As of a few minutes ago, we saw about 189,000 contracts on the tape, so it's probably going to break that ADV again today. The most active contracts out there today, the NOVE 21.5 puts with about 11,600 and the NOVE 22 calls with 10,300 on the tape. Let's break down what the hot positions are out there as well. Let's do a top 5. I know we have some questions, some other things people want to get to here on the show as well. Number 5 here in VXX in terms of the top open interest sizable positions out there this week, listeners. 23, almost 24,000 of the NOVE 16 puts. Number 4, 24, almost 25,000 of the Jan 18 puts. Number 3, 32,000 of the NOVE 30 calls. Number 2, 33,000 of the NOVE 17 puts. And number 1 with a bullet out there, 67,000 of the Jan 15 puts. Actually, some calls in the top 5 out there, so that's kind of interesting. You notice I didn't say our friend from Hercules out there, his 10 strikes. Those have been closed for a little over a week now. He got the heck out of Dodge, and as he was saying on our option block program earlier this week, he's looking to head out into NASDAQ land, trade a little bit of VolQ out there. So he's jumping ship from UVXY and heading out into VolQ. Paul, I know you said you guys like to trade the more direct route at SPX. Do you pay attention to the universe of volatility ETPs out there like VXX that seem to fixate so many of our listeners these days, sir?
I mean, we're certainly aware of them, but we're not active in them. But it looks like I've missed the boat again, to be honest with you. It's really it's one of these things I think I need to put in the holster and start to dig more deeply into, to be honest with you. I can see that, unfortunately, I have missed some stuff here.
We're gonna give Paul some FOMO, Andrew. He's not gonna come on the show anymore. He's gonna be too sad when he comes on. He'll just have a single tear every time he comes on the show. Mr. Rock Lobster, I know you're crazies. Is it fair to say they like to trade VXX more than VIX, or is it equal? What do you think? And what were they trading out there in VXX land this week, sir?
VXX land, strangles, like what I would just short delta strangle. That probably is the easiest thing because the vol was so high. Look at that. They're taking some options now. If I don't sell any vol puts today, I'm going to probably regret it next week, even if we do go a little lower. But I think that is VXX is a great product when the futures are moving. I would say that also as a product, it's great, like a 30-day and in product. It's not really a long-term hold, as we've discussed here by any stretch, but it can be extremely interesting to trade when the curve is flat, the futures are moving like crazy. It offers tons of potential. You can trade the decay part of it. You can trade the shock or the upside part. It's a good crappy product. That's what we'll say. It's one of our favorite. It's reliably crappy, but when the term structure is right and the futures are moving, it's great. And right now it's had quite a move, like 27 to 20 from Friday to this Friday. So you can get a move. There are times when VXX is poised to move. That's the best time to trade it. You can make a little money trading it. And we've had that recently. So now VIX gets interesting again. I think the no cycle is interesting because we're getting closer to expiration. That's when lots of funk can happen. December and January VIX right now, much more difficult because they're really not going to do very much until those futures do something. And I think that's what you learn with trading these vol products is the vol products are very dependent on the future is the key driver of the value of whatever product, just like anything. And you have to learn what they are for each vol product. So when you look at something like VXX, it's about 50-50 right now. I think that December future is going to hang somewhat because of all this new election funk or whatever. So we will get a little bit of action out of Nove. So I think the easier moves in VXX are kind of over. It certainly can go down. I think it's harder for it to go up. But no VIX is more interesting because it literally is the no future now. That could definitely, we could see some steeper moves down if people just, hey, we're okay now, and all the money starts pouring into the market. So I think that is potentially more interesting over the next 2 weeks as we go to VIX expiration. Then trading, let's say VXX, which is now like half of DEES and half Nove. So the vol of the underlying is slightly muted. So it's more of like it's harder for it to really rally hard. So mostly it just kind of ends up sort of sinking a little bit every week until November expiration. And again, unless we have yet another market shock for 2020. But VXX is now a little less interesting to trade. And no VIX, because of the potential movement, is a little bit more interesting to trade.
And Paul, I'd be remiss if I didn't ask you as well. It's not usually on our radar. On this program, we usually save it for our crypto rundown on Monday, but there has been a wee bit of volatility out there in the crypto landscape this week, not the least of which out there in Bitcoin, which coming into today, almost 15,500. So we've seen a tremendous rally out there in Bitcoin this week. What's been catching your eye out there in Bitcoin and crypto vol this week, sir?
Well, honestly, we're that's our big new market is the options in Bitcoin, and we're trying to get the market structures there, and we're trying to get all the stuff so we can trade it like we're used to trading, the SPX and the rest of it. And liquidity is always an issue, and sizing up and getting in and getting out of those things. So it's a bit more, I guess, if you're used to trading things in the States where you have these great deep liquid markets where you can see things and mark things and do all those things, it's great. But in Europe, we're kind of used to having blank screens a lot of the time. So we're okay with the Bitcoin stuff. But the volatility had come off quite a bit in the last couple of months, and now we're back and we're roaring in the 15,000. We just ripped through it, and 20,000 here we go. It's one of those things that the more this thing goes, the better it's going to be for the whole product and the whole environment that's trading around it. I'm really a big backer of the whole idea.
So that was you out there then buying, what was it, 16,000 of the Jan 36,000 calls? Was that you, sir?
I think that was a little bit high for me. That was a little bit out of my range.
A little optimistic. You're more of a 30,000 guy. I see. Yeah, that one came across our radar this week on our crypto show, and I had to just pause and take a breath when I saw that. That's optimistic, dare I say aggressive, but just about any stretch of the imagination. He's not going out a couple of years. He's only going to January. Of course, I guess if the move we've had over the last couple of days could continue through January, we might be close to that 36,000 level. And we are very close to your segment, listeners. It is time to open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Let's see how many of you we could squeeze on here. We've got Surfing Gang. He was listening to us live earlier. We were talking about, our surprise or perhaps lack thereof that people are out there buying this market as aggressively as they are. He chimed in to say, no, he's not surprised. We spend a lot of money on decisions based on less evidence than what we can conclude about the election at this point. Yeah, that's true. Right now, that's the case. I don't know if that was the case in the early swirling mists of Wednesday morning, and yet people were still buying this thing hand over fist. So, yeah, right now I agree with you. I'm not sure if I agree with you a couple of days ago, but clearly the market doesn't care. The market's off to the races regardless out here. Let's look. We got so many different topics here. Let's go to this one. Let's go to this one from Nicholson. Nicholson says, hey, volatility views. Well, hello, Nicholson. He says, new listener alert. I just discovered this show. And he puts in parentheses, and I'm kind of new to vol markets in general. So beware my naivete with my questions. I'm exploring the idea of selling puts on major companies like Apple, Facebook, etc., and then I'm considering buying VIX calls or maybe spikes calls to hedge against a downturn. What do you think of this approach? So he wants to go out and sell puts on the big names, the big dogs, the Apples, the Facebook, etc. And then, in case the worst should come to pass, he wants to buy some VIX or spikes up. So he'll be the one guy buying VIX calls. Nobody else wants those this week, but apparently Nicholson does. I don't know, Paul, what are your thoughts on this kind of a baby version of a dispersion trade here, but doing it in individual names like Apple and Facebook and then picking up upside in VIX against it, sir?
Yeah, I mean, the dispersion we used to do was the opposite, right? It was always you're going to buy the single name downside and sell the index because that was the way it is. And I guess it depends on what your volatility is and where you're selling and what you're buying. And, you know, are you trying to get the carry out of this trade? And if you're doing the carry, then how much of the VIX call is costing you and there's a lot of things that you can think about this one. What are the correlations? Where are you going to make your money, to be quite honest with you? Are you going to spend it all on your VIX calls? Or are you going to are you going to get exercised on any of these other things, or are those going to expire worthless? I mean, I can see it as a thing. I'd dip your toes before you jumped in the water on this one, is the way I would have said it. If you were going to do it. It wouldn't have been my first choice as a trade, I'll tell you that.
Yeah, I know. It's not my ideal structure either. Mr. Rock Lobster, I'm sure you've had some newcomers, like Nicholson says he is, come to you over there at Option Pit and ask you something similar. What are your thoughts of doing the downside puts in a big tech name like an Apple or a Facebook and then, quote-unquote, hedging it to the upside with VIX calls?
Well. I think, one thing, too, is when to do that trade. When you look at VIX calls, anytime you trade VIX, because and I just had this conversation in our market show, since it's a reverting product, it's not like VIX goes to 200. I mean, I never thought I'd see it at 100, but it went there. But even when it goes to 100, say the futures went to maybe like 65 or something like that. So when you're trading VIX, you're trading the future. So when you're trying to do a trade like that, how much can you actually get out of VIX as a hedge? So you have to learn how to kind of price that out. What I would recommend, look at some market shocks, look at what the calls are worth one day, look at what the calls are worth another day when you have a market shock, and see what kind of performance you can get out of your VIX call. Right now, we're in the danger zone, as you would like to say. So it's hard to get a lot of performance out of VIX calls. VXX calls would probably work better if we have a pop. I have found if you want performance in the short term for a vol pop, there's nothing like a 1 week VXX call if VXX is moving. Because literally when VXX decides to go $5, $6, $7, a call you paid 55 cents for is worth like $8. So there's a lot of gamma in that call that can give you a pop. And I generally don't recommend people sell puts in equities unless you've done it before. I've probably mentored 500 or 1,000 clients at Option Pit, and everybody comes to me saying, oh, yeah, I want to sell puts here and do this, and I'll take delivery and it'll be fine. And I have not found one person yet that has taken delivery on a stock that they sold a put on and be happy about it on the day that actually happened. And I'm short puts right now. I sell puts because I know I'm going to take delivery. and it's not an over-leveraged position. I expect to take delivery on some of these things. And I own some upside in the vol products. What I do, though, is, like I said, remember in March when I got a bunch of crap about this from people saying, pick a ridiculous price and sell a put. If you think you can handle delivery on that level, I think you're good. And you have the money to do it. And when I say ridiculous, come up with a crazy price and then go lower. Usually probably 2 standard deviations away from the money is a good place to start. So I personally think VIX calls make a poor hedge against short puts in something like an Apple or a Google or something like that. Because literally Google could be down $200 and the puts you sold are probably 30 or 40 bucks against you. And, you're like, wait a minute, this didn't work out very well. So I'd say, again, that doesn't work great. It would work a little better if you sold put spreads in those names and then maybe looked at a put or two buying a Q put or a SPY put against the dispersion of the equities that you want to buy, again, way out of the money. You can make that work a little better if if you pick the right stocks that you want to do. So basically you sell more credit than you get with debit, and you kind of work out the arithmetic and say, hey, is this worthwhile for me? Am I making at least 2 or 3% a month with this strategy? Is it something where I can make some dough in? So that was a very long-winded answer to that question, but I would say, all of these Q stocks are at all-time highs. VIX is already in zone 4. I think that's a rough hedge. It's a tough one to make work. Let's put it that way.
Yeah, Nicholson, I don't think any of us are super enthusiastic about that, particularly when you come to us and say you're just starting out in options and indeed volatility. Start something a little bit easier, a little bit more basic, and maybe a little bit more one-to-one. Just explore what goes on with your SPY and the SPX puts versus VIX calls before you start getting out in some of these single names where, like we pointed out, the correlation not exactly one-to-one. It's interesting thought experiment nonetheless. Let us know what you end up doing there. What was it? Nicholson, as we keep on rolling into our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the most difficult, some might say the most dangerous portion of the program here, where we attempt to wrestle with the volatility gods and see what they hold in store for us for the coming week. And this was probably one of the more difficult weeks, if not the most difficult week of the year last week, because we had to wrestle with them through what was probably going to be one of the biggest vol events in one direction or the other of the year. So it became an open question as to where those goalposts would be at the end of the week. Of course, a lot of that was wrapped up in would we have an outcome by the election night or would it drag on and so forth. So you could see that reflected in our prognostications from last week. Brian from Ally Invest was all the way on the upside at 35. He thought there would still be a lot of uncertainty heading into Friday. Tom from MyX was right behind him at about a 29.99, so he thought just a tick under 30 out there in spikes and VIX, as he thought there still, again, would be a decent amount of juice, but some of that would come off the board. That's below where we were this time last week. I thought we'd be off the board a little bit more as well, down to about 28.65. And Mr. Meatballs, he has wanted to do was just fading the hell out of everything. He's in at 25.25. And it looks like, even though my level was looking good earlier this week, as of showtime, end of the show here right now, it does seem like we have drifted closer to the Meatballs range. Spikes is at about a 26 even to wrap up the show here. And VIX is almost there. VIX is almost at a 25. Actually, it is out about at 25.25. So I hate to say it, but we're pretty much almost at a bullseye for the Meatball. A rare bullseye, a rare victory for the Meatball. So unfortunately, I will have to give him the pride of place on that one. That means, Mr. Rock Lobster, you get to choose. You get to choose whether you want to go first or you pick someone else to go first. Just don't pick Paul. Be nice to him if you want someone else to go first. He is our guest, after all. Give him a chance to formulate his opinion, sir.
I think Paul's a professional, and he can handle it. So You know this game. It's a rough and tumble game, and if I have a chance to scum both of you guys on the ball pick, I'm definitely going to do it. Plus, you have to give credit to the Meatball for nailing VIX to the penny. That's not bad.
That was pretty good. There have not been many bullseyes this year. I think I've gotten a couple, and the Meatball has gotten this one, obviously. I think maybe one other. But it's been a scant year for bullseyes, as you could probably guess out there.
Yeah.
So
no, I'm gonna take this opportunity to lean all over both of your vol bits for next
fine.
week.
You want to try to force our poor guest to go first. Just remember, Paul, it wasn't me. It was Andrew doing this to you. So, Paul, you get the pride of place of going first. Where do you think VIX and or spikes will be at this time next week, sir?
I think we're going to continue to come off. We get the announcement of the winner, and we're going to hit 23. Michael Jordan.
23. A little Chicago homage there. 23 even for Paul. Interesting. I guess that means, Mr. Rocklopsy, you want me to go next?
It does.
How can I see how easily this is playing out? All right, Paul kind of went where I was feeling. I was not quite feeling as much downside, though. I'm going to say 23.75, so a little bit more juice. That looks like that's about a buck and a half below the Meatball, and it's about almost 5 handles below what I was prognosticating coming into this week. So there's your market. Pretty tight, actually, Mr. Rock Lobster. 23 on the downside with Paul, 23.75 to the upside with me, which means you have plenty of room to go crazy on the downside if you want to do so. Have at it, sir.
I have to say, Paul's number I liked a lot. That was kind of the number in my head for this week.
So you undid yourself with your own skullduggery. There you go.
So well this is a tough one because every time this year we're at this low vol inflection. Like every time, are we going to go into zone 3? Are we going to get out of zone 4? Every time it's failed and popped right back up. So I'm just going to tell our listeners, I'm going to go 22.5, even though I feel it's too low. It's probably too low. And I jumped about 40% of my vol puts today, and I'll probably do a few more here before the end of the show. But that doesn't mean I still have about 60% of the position on. So anyway, I'm going to say 22.5. To be honest, I think the market's just tired of the vol. And it's going to take a week, and it's just going to do nothing for a week. The market is going to rest. We'll see what happens.
Unfortunately, we will be resting soon as well, because that music means we have come to the end of the program. There's your market this weck. See, that's what you get, Mr. Rocklops. You try to pull a little skullduggery, and it comes back to bite you. But I think we all had a similar level in our head, right around 23, which is funny. Paul just got there first. So that was our market this week, 22.5 on the downside with the Rock Lobster. Paul in the middle there at 23. I was a little bit north of that at 23.75. So a fairly tight market, given all the madness we've seen out there in the volatility space this week. And Mr. Paul, you did an able job holding down the Matrix Executions hot seat for the very first time. So well done to you. And if folks are intrigued, maybe they want to reach out to you, learn a little bit more about all things Cerulean, sir, where should they go? What should they do?
Hit me up on LinkedIn. No problem. Paul_John_Anderson on LinkedIn. Feel free. I would love to talk to you. I want to thank the guys at Matrix Executions as well for inviting me and the both of you guys as well. It's been a great hour. I really love the show.
It was great having you here, Paul. Check him out if you want. Paul Anderson, Dispel the Way You Think, and Cerulean is CERULEAN, Cerulean Trading, if you want to learn more there. And you mentioned you're holding down the Matrix Executions hot seat for the first time. The cheer is so new, we literally just rolled it out before showtime. You don't even have all the signage attached yet. That's coming next week, so I'll do that the old-fashioned way. If you want to learn more about Matrix Executions, they are an agency-only broker-dealer focused on BEX execution and trading workflow automation. A tech-driven firm, Matrix was founded by options innovators with decades of experience in cutting-edge execution solutions. With unique industry expertise and state-of-the-art assets, Matrix delivers exceptional technology and effective results to demanding institutional professionals. They're located here in good old Chi-Town. If you want more information, matrixexecutions.com is the place to go. And Mr. Rock Lobster, if folks are intrigued, they want to reach out to you, maybe with some more ideas for funky dispersion trades the wrong way or something else, where should they go? What should they do, sir?
Well, they can go to optionpit.com, look at memberships, all of our goodies. Mark has been working so hard with our Little John product. I think he hasn't even been out of his house since he moved to to Texas. So, but all of our trade products, our education, everything, surf on over to optionpit.com. If you want to see VIX Made Easy or VXX Made Easy and learn how the products work, there's actually a video series on it called VIX Made Easy or VXX Made Easy, so you can understand actually how the products work. And I'm sure it will save you. What does it cost? It's basically $1 or $2 on a one lot, and it will at least save you that much money doing stupid stuff. So learn how the products trade first before you go plunk your hard-earned dollars into them.
There you go. Check it out. Optionpit.com to learn more. You know where to go to learn more about spikes. MyAxOptions.com/spikes is the place to go. The folks from MyAx should be back with us next week to give us an update. In the meantime, check out that site. Of course, you can get the links to the most recent quotes and trades over there in MyAx Land. All the data, a cool little 2-minute video. It's kind of explaining what the heck spikes is in a short, pithy format. You get, of course, all the releases, so you can see when those futures come back for yourselves right there. Even a link to a cool show called Volatility Views. I ask you, what more could you ask for from a volatility destination? You know where to go. MyAxOptions.com/spikes. And on behalf of Paul and everybody over there at the newly minted Matrix Executions, a hot seat, and indeed Mr. Rock Lobster and everybody over there in the land of the pit, and our friends over there in MyAx Land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for joining us live throughout the week. We love you all, and we'll see you back next week for another Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.